Hello everyone, Brian Fees again. This is video part 2. In part 1, we talked about a few tax planning ideas you can use before the end of the year. In this video, we'll talk about charitable deductions that you can take advantage of for this year's taxes. Now, if you're someone who's already charitable minded, there's one very easy thing you can do, and it's a $300 deduction. So if you're already giving to charity, maybe you're like most taxpayers, you use the standard deduction. Well, on top of that standard deduction, you can get a $300 deduction for a gift to charity. So that's a very easy thing to do. Another strategy is something called a donor advised fund. The way this works, you can move any amount of money to your donor advised fund. You can fund it this year, you can contribute in future years, but it allows you to get a large charitable deduction right away, and you don't yet have to name the charity that will benefit from it, or multiple charities. So let's say you had a large income year. You just had a spike in income all of a sudden. Maybe you retired, you had a non-qualified pension payout. If you're looking for a way to reduce your income, this is a great way to do it. So you can fund your donor advised fund, get the charitable deduction. Now remember, because you're getting that deduction already, the money has essentially left your estate. So you can't change your mind in the future. Now, once the money is in the donor advised fund, there are investment options that you can choose from. So your account can grow over time. And in the future, you can name one or more charities each year, and you can change it from year to year to receive a portion of your donor advised fund. So presumably, you could set this up for the rest of your life and give to charity for many years to come. Another simple charitable giving idea is what's called the qualified charitable distribution. If you're 72 or older, you have to take required minimum distributions from your retirement accounts. This year is an exception. You don't have to take an RMD this year because of the coronavirus, but in future years, you'll have to. Now, the qualified charitable distribution is still allowed this year. So if you still want to give to charity, this is a great way to do it. Now what this is, the QCD, instead of having your RMD, your required minimum distribution, paid straight to you, you have it paid straight to a charity. And it's important that it goes straight to a charity. Because it's going straight to the charity and not to you, it's not actually a taxable event to you. So it's a great way to satisfy the RMD rules and still give to the charity of your choice. Now there's many other ways to give to charities. These are just a few ideas that I think work very well. One thing to think about when you fund something like the donor advised fund, or maybe like a gift annuity, which we didn't get into today, you can fund that with cash. So you can just move $100,000, for example, to fund it, or you can gift highly appreciated securities. So let's say you had a stock that has made a significant amount of money over time. You can give that to charity or fund your donor advised fund with that, and it accomplishes two things. You don't have to pay capital gains tax on the earnings, and you get the charitable deduction. So it's something to consider. To sum things up, looking at charitable deductions, consider the $300 gift to charity. This has to be made with cash, but this goes on top of your standard deduction, so it's an easy one to get. Consider funding a donor advised fund. You can fund this with a large amount of money, and you don't yet have to name the charity. In the future, you can name one or more charities, and you can change it every single year. And then think about the qualified charitable distribution. So if you're taking an RMD, have that RMD go straight to a charity instead of to you. Again, this satisfies the RMD rules, and you don't have to pay taxes on it. Thank you for joining me for this video. I hope it was helpful. If you missed part 1, there is a link in the video description. You can go there and watch it. We talked about a few other tax planning ideas. As always, if you have any questions, please feel free to reach out to me. I'd be happy to visit with you. I wish you the very best.